So welcome to the traders meeting. And we've got Anthony as our guest speaker. Thank you so much for coming, Anthony. This was recorded on the 27th of November 22. And we've just been discussing market responsiveness. And Anthony, would you mind repeating what you just said, please? I thought it was pretty interesting.
Yeah, that's right. So in my experience over the last couple of years of trading, I found it quite unusual to have a string of consecutive weeks of low market responsiveness. And you're always going to get the opportunities that crop up there. But yeah, it was fairly quiet. And that is out of the norm based on what whole 2 years of live trading the systems. But where we are now in kind of we're coming into the Christmas period, so things will slow down a little bit, but I'm hoping that the next couple of weeks will be a little more active, the first 2 weeks of December. And from there, I'd expect to see things quieten down a little bit and liquidity kind of thin out a little bit as well.
Gotcha. Okay.
But yeah, it's amazing, isn't it? The role that market responsiveness plays in trading.
Totally. I used to surf, and so I like the ocean metaphors for the markets. And and if there are no waves, you can paddle as much as you want. But yeah, and so yeah,
you can't force those. You can't force those trades and those big R winners. Certainly not at any time, but it's certainly not when market responsiveness is low.
Yes. Oh, and so because Gabrielle talks about watching things on Monday to get an idea of market responsiveness. So do you sort of look for patterns, mark them out, and come back on Tuesday and go work or
so, maybe what we'll do, Todd, is I put together a presentation in March of this year, and I've just kind of marked it up a little bit, and some of the things that we've been speaking about pop up in there. So maybe if we run through the preso, that might frame the discussion a bit, but then just like anytime anyone's got any questions, just jump in, especially if I'm talking too much and you have any burning questions or anything. So I'll share my screen.
Right. Yep. I just made you co-host.
Thanks, mate. I've just shared that.
Actually, that'd be really good, Anthony, because that was one of the first things we saw when we first joined up, eh?
It was great.
Oh, was it? Yeah, I lost track. I couldn't remember.
Yeah, about in the first week, I think it was. Yeah.
Oh, nice. Okay. Yeah, good. All right. Now, can you guys see my screen? Okay, cool. All right. I'd use a completely different tool at work, so I'm not familiar with Zoom whatsoever for sharing the screen. So like Pete said, it sounds like this preso, I think it was this preso, was one of the first things that you would have seen. When I put it together originally, it was to help out or provide a bit of guidance in terms of actually running through boot camp and then LMP and things like that, so kind of in that training environment. But what I've done now is I've tweaked it a little bit, because I think now that you've been trading live or dipped your toe in the water and things like that, there will be more live trading related content that is worth delving into a little bit. And I thought I'll set the scene just so you know where my thoughts and experience come from as well. So I'm in Western Australia, and the time zone here is GMT +8. I work full time, and then I trade after hours. So when I finish work in the afternoons and the evenings and things like that. And when I first did Gabriel's, I think it was maybe like LMP and started Masters, the timing for my trading worked out great because I was working from home because of the COVID lockdown. So everyone was working from home, and that made it really easy to transition straight from my full-time role into trading, because I was at home already. There was no travel or anything like that, and all I had to do was power down one machine and power up the other. So that was really good. But one of the challenges that I faced when I had to return to the office after the COVID lockdowns and everything like that was missing out on the London Open. And through looking back at some of my statistics, I quickly realised that London Open was where I was finding a lot of opportunities, just because I managed to finish work and look at the London Open, that sort of stuff. And the London Open is actually quite traditionally the time of, like, there's a lot of influx and momentum, a lot of orders and that sort of thing as well. So I wasn't quite cognizant of that at the time, but after the fact, when I missed out on those opportunities, I was cognizant of it. Not to say that there's not opportunities in other time zones, because there absolutely is, including the Asian time zone as well from time to time. So that was a bit of a challenge, but I've been tweaking my trading routine over the last, I guess, really kind of 6 months, roughly time frame now to just change my focus a little bit and trade a little bit later in the London session and focus on the New York session as well. So I miss out on, or almost entirely miss out on the Asian session over here, which is not the end of the world because it's definitely quieter. But from time to time, like the Asian session, you have kind of continuation moves from the night before. So when I was working from home, it was nice to be able to capitalize on that. Yeah. So kind of tweaking my trading routine at the moment, but still going fairly well and fairly consistent as well. Now, as I mentioned, so I put this together in March 2022 to how to actually undertake the training side of things. But since then, my trading process has evolved and I've kind of streamlined some things, particularly because now that I work full-time somewhere else, come home and trade, I don't have the luxury of time, so I've got to be a bit stricter. Your knowledge of the actual systems as well would have changed, no doubt, over time. You would have picked up some of the nuances and put a lot of it into practice as well in the live markets, even if it's in just a small position sizing or something like that to start with. The general plan for this chat is I'll go through this prezzo. I've made a few tweaks and a few notes here and there to kind of run through as well. But then definitely ask any questions if you have them as well. I don't want to make this one-sided, so I'm all for some engagement.
Great, thank you. I thought we could just do a quick hands up because I'm still demo trading. Peter, I know you're live trading.
Yep, I've got a $1,000 bank, $10 trades.
Awesome. And Issue, are you live trading as well?
Yeah, same like Peter. I've got $1,000 and like a $10 position size.
Awesome. And Morland's, I can't see. So
No, I'm just driving, but yeah, I'm live trading with a very small account as well.
wonderful. So 3 out of 4 live trading and me coming along behind. Up the courage.
So let me pose the question now while I think of it. So the live trading, even a small account of things like that, have you noticed a change in mindset, a change in pressure, or any significant differences at all?
I think there is a little bit of pressure change, and you notice that the moment you, at least for me, and I think from looking at the Slack, I think same thing Alex has commented. So the moment you go to the live account, it starts going down. My equity curves started to go down quite sharply. So there is a bit more pressure, but interestingly, I sort of like still get frustrated if I don't if I have a losing trade. Same with demo and same with live. So yeah, there are some similarities, some differences. Peter?
Basically, a little bit of pressure involved. I found a lot of relief in listening to those barrel tapes that Gabriel gave us a couple of weeks ago. That for some unknown reason, and I've never been a believer of any of that stuff, that just the pressure seemed to disappear. I can't explain it. I don't know. Have you experienced anything like that, Anthony?
Yeah, I have, mate. I'm the same as you. I'm open to everything, and I've got like an engineering background, so I like to think of myself as a logical person and things like that. So there's things that I'm always skeptical of, and the thing that has surprised me the most, or one of the things that surprised me the most, has been Gabriel, as part of Masters, you recommended the Sedona Method, and I think he might have mentioned that to you all as well.
Yeah.
Because as you move into Masters, there's a lot more focus on psychology and beliefs and things like that. And I was like, all right, I'll give it a go, because my whole approach to the course, and particularly Masters as well, is that anything that Gabriel recommends, I'll have a go at. And particularly if I feel any kind of resistance to anything, I'll take that as a sign that, maybe I need to really give it a go and go all in on it. So I bought the Sedona Method. I got it off eBay because I'm a cheapskate and didn't want to pay full price for it. And I wanted the CDs so I can, if it was any good, I can share them with my kids and everything like that. I bought them and I listened to the first couple of CDs and I was like, this is way too simple. This is not going to do a thing. I gave it a go and and I was blown away with how effective it was for me for releasing some of those limiting beliefs. And every time I try it, there's this not limiting belief, but there's this nagging feeling. I'm like, this is going to be a waste of time. This is not going to do anything. And every single time it yields benefit, it yields value. It's unbelievable. It's so crazy, Pete. I can't believe it. I can't explain it. Something so simple. And it's funny you bring that up because I actually just yesterday added a slide to the end of the pack here. And it's about the process that I went through when I applied the Sedona Method to one of the beliefs that have got a limiting belief as well. Limiting belief / kind of recurring problem actually as well. And I kind of tweaked it a little bit, put my own spin on it, but yeah, that's in there as well. So hopefully we'll get time to go through that as well.
Fantastic.
So like I said, we'll talk kind of content that's more relevant to live trading wherever possible. I'll talk about some of the changes that I've made, some of the stuff I've cut out, what I've left the same. And like I just mentioned, I've got this limiting belief that I had and how I'm overcoming it. Notice I've put the emphasis on the present tense, overcoming it, not past tense as, overcome it. Still a work in progress.
Right. Super interested in that.
And then I'll have a quick chat to you guys about just my current thoughts on trading and where I see it fitting in to my life in general. So this slide here, I'm going to put everything up on the screen actually for this one here. So this is what I put together for the course last time around, for the Prezzo last time around. And I think it's still equally as relevant now, right? Even though you've all gone through the training and either live trading or preparing to live trade. So mastering the basics is, looks conceptually simple, but there's nuances there, as I'm sure you found out as well. So you've got the trading mechanics side of things, right? So you've got, whether you figure out whether using MetaTrader or TradeStation or TradingView or whatever else is out there, and you learn how to place the trades and use the different order types and that sort of stuff. And that, once you've bed that in, it's pretty simple. Actually, I'll say what I was going to say for the next part. Yeah, and then you've got your position sizing as well, which when you're learning, and particularly when you're demo trading, is less of a consideration. So you might have a demo account with 100,000, and you'll just be like, all right, yeah, $1,000 a trade. But as you go to live trading, you'll find that becomes more of a consideration, and then it doesn't stop being a consideration, right? Because as you become more consistent or more confident, you might inject more capital into your trading account, and then you'll increase your position sizing. So I started off when I had my live trading account. I had a small account. I started off with like 1.5% risk because I had a small account, and that was well within the realms of kind of my level of comfort and things like that. But once I went to a full account, I found that I had to scale that back because I just had this kind of resistance and, just this level of discomfort and nervousness when I was trading. So you definitely want to have a think about your scaling plan in terms of your account itself, but also the position sizing there. So don't get kind of too carried away and, dump $100,000 into your trading account and start risking 1.5%, for example. You want to gradually scale up your trading accounts after you've been consistent for a couple of months. Then you might want to increase your account size by 25-30%. And then once you're comfortable with that, kind of rinse and repeat the process. And then when you feel fully comfortable, you might be tempted to go for your full position sizing, but I'd still recommend taking it slow. But obviously everyone's different, right? We've all got different levels of comfort and things like that. So do whatever works for you. I don't want to hold anyone back, but I would definitely advise exercising a bit of caution there, because otherwise you'll do what I did is, you go to your full position size. You've had lots of little wins, for example, and you end up with a, tidy profit in your account. And then you go full position size and your first trade with that full position size is a loss. And you effectively have lost half of your gains leading up to that point, for example. And it can be quite demoralizing, you know what I mean? I'm lucky when I do silly things like that, I find it funny. So it doesn't affect me too badly. But yeah, if I can save some pain for some of you, I'll be happy about that. Different order types. So have you all played with different order types, particularly for like S2? You know what I mean? S2 is a good example, probably because you can use a buy stop order or something like that for going long. So have you all played with the different order types and kind of settled into a preference for that?
Yeah, I have, yes.
Yeah, I'm still a little bit unsure about the order type, so it's a really good reminder to get clearer on what each one of them does.
Definitely do that, Todd. Yeah, you want to have all of that stuff better down and well understood and everything. So it's not so much of a conscious consideration. You're not devoting your mental capital to that when you're trading. You just want that to be kind of instinctive, or just learn behavior and things like that. Yeah, I definitely recommend doing that as well. Look, the other thing with the order types is and order execution is the exit algorithm as well, right? So I think, I can't remember who it was, maybe it was Alex that was saying that there's, an EA there that can help you to automate some of the exit algorithm. So it's definitely worth investigating that. But again, you want to make sure that you understand the exit algorithm as well, right? And you want to, I think you even want your kind of buttons pushed a little bit in managing exits and things like that, so that, any of these limiting beliefs or so on, it kind of bubble up to the surface early on, because what you don't want to do is kind of push all that stuff to the side and then have that come up when you're trading live, with a 6-figure account or something like that. So it's definitely worth managing the exits manually for a time, even if it's in demo or whatever, so that you're comfortable with the mechanics of it, but also you're getting a sense of that button pushing as well, for want of a better term. Pete, sorry, I didn't hear you out before, mate. So what, with the order types, what have you set it on for the 3 systems there?
Right, yeah, I've only ever taken the one trade on the S3, but basically I only trade in the afternoons on Tuesday, Wednesdays and Thursdays, and I've got to pick up kids in the middle of it, but I just kind of work around that. So yeah, I do I'll have to think what it is now. It's a stop. Where's my book? I do a stop. Quite often put a stop on an S2. Okay, you can get. I find S1s are hard to get into. You have to be here basically to do them. S2, I can work them both ways. And then I always go 3 and 1. I always go 1 quarter in and 3 quarters of the lot, so that I can set my 1.2 at the 1 lot as a stop, and then I can walk away from that trade and go and get the kids, and basically I haven't moved my stop up, but usually I'm learning to do that on the phone. I'm finding I can do that on the phone in a car if I need to. I haven't needed to yet, so fortunately. That's where I'm at that, really. I actually just need more practice, really, in the live market pressure scenario.
Yeah, absolutely. It definitely becomes a lot more real when you're trading live, and it forces you to think about all those different considerations, like you said. So, rather than when you enter a position on some platforms, you might want to split it. So you've got your 1 quarter you can take off at 1.2R and let the other 3 quarters run. So
yeah, well, I'm not much on EAs or anything, so that's the way I had to work it. So yeah, so it's a buy stop or sell stop is what we got to be doing most of the time.
Yeah. Yeah, you just mentioned the S1 trades as well. Was it something that sprang to mind, which perhaps fits into this kind of second category here, mastering the systems? So one of the nuances that I've found with S1 is, that re-break of the flat line. I found that it makes much more sense for me to wait for the candle close for that. Okay, so making sure that the candle actually closes above the flat line. This is just my experience, you know, and that sort of stuff, and do your own research and everything. But what I did find, S1's actually my favorite trading system as well. It suits my personality for whatever reason. But what I was finding is, in my eagerness, you know, to want to jump the gun and get into trades, because that's definitely a personality trait that I suffer from. As soon as it kind of, you know, broke up above that flat line, I'd jump into the trade. And then quite often you find that flat line can actually act as a support or a resistance level. So it'll come up, you know, even spike up, and then it'll be rejected from there. Candle will close under it, and then the trade will go against you as well. So definitely keep that in mind when you're doing, you know, your back testing and your forward testing and live trading and things like that, and whack that into your trading playbook as well.
It's a very good point, because that's why I find I have to be here, really, because you've got to really be there to put the stop in place and make sure everything's right for that one trade. Excellent idea, Anthony. Thanks for that.
Yeah, no problem. No, that's fine, mate. And look, there's ways to kind of automate some of the entries and things like that. But once again, I would advise doing things manually for a period of time to make sure that you're getting the full kind of benefit of the live market trading experience as well. Getting plenty of buttons pushed as well, just to repeat myself. Yeah.
I think Isaru's doing an EA, aren't you, Isaru?
Yeah, I'm doing the same one as Alex. I did it manually as well before, and it's interesting what Anthony said just about the S1s. So I have noticed that some of them will have a spike, can I be in it, and then it can go the other way and close below that. So something I'll have to have a look at as well.
Yeah. And so you were talking about. Sorry, go ahead.
Sorry, Anthony. So I understand completely what you just mentioned. So on S1, you have a flat line, there is a breakout bar, and then you actually wait for the break in, if there is such a thing as a candle, the entry candle to actually close before you place your enter. That's
exactly, yeah, that re-entry bar back into and above the flat line for a long
right
to close, and you know, it's deceivingly harder than you'd think, because you see a big green candle re-entering, you know, pushing up above the flat line. You're like, oh, okay, this is it. The momentum's coming in, and the nation is to want to take the trade. But like I said, once again, just from my own experience, I found that I'm much better off waiting for that candle to close and just having an increased likelihood or probability that it's going to stay there and then, you know, continue in its upwards journey as well. But yeah, definitely. I know I keep saying this, but do your own homework, because I'd hate to I'm just talking from my own trading experience, and I don't know what sort of, you know, time zones you're trading in and things like that. So it can be different.
What is your preferred time frame for S1s?
So in terms of, like, I'm bound by it's dictated to me, to be honest with you, mate. So for me, I trade after work, right? So I work full time, and then I finish work anywhere from 3 p.m. to 6 p.m. And my time zone is GMT or UTC +8. So the London Open used to be my favorite when I was working from home during COVID. But then when I return to the office, it's rare that I get to trade that actual Open now. But I generally, there's overlap with the London session, and then I can easily trade the New York session, because that's, let me think. So it's about 12 or 13 hours difference from here. So like 9 p.m. Here is 9 a.m. in New York, which is generally the Open. Yeah. And
within the charts themselves, are you more of a 5-minute, 15-minute side?
Yeah,
or are you more on the?
So it's funny, because the makeup of my trades hasn't changed a lot for the last kind of like 18 months. So most of my trades are the really low time frames, 1 minute, 5 minute. And then I have, you know, some a lower number of 15-minute, and then an even lower number than 60-minute, and then maybe like 3 or 4, like a handful of H4, like 4-hour, 240-minute trades as well. Yeah, it's been quite consistent. Look, I do think that is probably largely born from like my personality type, where I like the action a little bit more. So I think that's part of it. But obviously, the lower the time frame you come down, the more setups that you will see. It doesn't mean they're good setups, but the more setups that you will see for sure. Yeah.
And Anthony, with the lower time frames, like the 1 minute and the 5 minutes, do you have time to do written analysis before you enter, or you've seen the setup and you know it's good, you've checked it off, and you just, when it triggers, you enter?
I almost always, yeah. Look, for a couple of reasons. One is, as the setups are developing, that's when I do my analysis, and I take even a screenshot at that point and start typing some things up. And I do it in really short form at that point in time, just like bullet points, maybe, and that sort of thing. Or quite often I just copy paste, my previous analysis and just kind of change the relevant information. The second reason is I got like a technology IT background, so I can type like really fast. So I don't have any challenges with that. I'm very lucky. Yeah. But I do that. One other thing actually is that some people have had success with the is it narration or dictation or whatever it's called as well. So you can just go to record some bits. I haven't actually tried it. I haven't actually tried it. I keep meaning to, but I don't really have a drama typing stuff up quickly. So you can do that. At worst case, just jot some notes down on a piece of paper or whatever, and then transcribe them later on.
Okay, cool. Thank you.
But don't shortcut that. Like when my trading goes sideways, it's when I deviate from my process. So one of the mistakes that I used to make, particularly when I stopped working from home and had to return to the office, I would rush home, I'd turn my PC on, I would skip my initial trading prep, process and everything like that. I'd see a setup and I would take it. And then when I took it, I'd be like, hang on a minute, that's like it's right up against the 200 MA on H4 or whatever it is, you know what I mean? So just be mindful to, particularly when you feel rushed or feel stressed, to slow yourself down. There's so much value in that. You will save yourselves for sure, guaranteed. Yeah.
Thank you.
And you were on a 1 minute and 5 minute time frame. I'm assuming the spread is not a problem most of the time. So one of the things that I have noticed is that at least the way what I'm finding on almost all the time on a 1 minute and frequent enough on a 5 minute spread, the bid ask is often beating the 20% threshold. And so I'm assuming that you are staying closer to the most top 6 pairs only. I mean, is that your main game plan, or do you wander around?
Yeah, look, it's more than top 6. I'd say probably the top 10 to even 12, to be honest with you. And I've never actually looked at it, but I'm guessing that the times that I'm trading at and I'm finding those opportunities, it's probably times where there's higher momentum and higher liquidity and, more orders flooding into the market and things like that, because it's quite rare that I have to reject a 1 minute or a 5 minute trade because of the spread. And that could also be the broker, right? I know there's significant differences with spreads with brokers, because I talked to my friend Chi in Japan, and we compare spreads sometimes, and I'll send an opportunity his way and he'll send one to me, and sometimes I'll send one to him and he's like, no, I can't take it because the spread's too big, particularly on Owanda, his local Owanda broker or whatever, something like that.
Yeah, I have Owanda too, and I'm finding that spread is an issue as well. So who do you use, broker?
I've got 3 different brokers. So I've got Go Markets, IG Markets, and Pepperstone as well.
Okay. So I think IG is available in US, so I need to check them out as well.
Yeah. Yeah.
And one more thing on the different order types, right? So I have a style that is very similar to what Peter was describing. 2-part order, 25%, 75%. 25% will knock off at 1.2. The other one can go on for a little further. But in terms of order types, right? I mean, are we talking mostly a market order and a stop order, or are we am I missing something? Is there something more to it, or it just those two?
No, I was referring to market order versus stop orders for entry as well. So not to be confused with initial stop, but using stop orders for entry, which I'll occasionally do for S2. Yeah. Like the few trades that I've done on the higher time frames, like the 4-hour chart, for example, I think similar to Pete's Australia New Zealand short trade, I think it is, where you're kind of expecting something to happen and you might not necessarily be there for when it actually triggers. In those instances, I'll use a stop entry order. The other thing actually I should mention, with different brokers, sometimes, particularly with MetaTrader 4, they give you some add-ons that maybe to help support entry and exit and things like that, and partial closes. So some of the brokers will offer just add-ons or plugins or whatever you want to call them that allow you, for example, just you can just enter the order just as one order, and then you can scale out of positions and scale in, and you could have trailing stop losses and things like that as well. So when you're looking at brokers, it's always worth investigating just what extra plugins they offer as well, in case there's anything useful. So with the systems again, so you all know the three systems. You've got a good inkling of kind of what constitutes a high quality pattern, that sort of stuff. The difficulty is, and actually what I find, is sitting on your hands when you see a pattern. That my original kind of inclination was, you see a pattern and you're like, oh cool, here we go, and you take it. But you really need to slow yourself down and say, all right, well, is this a high quality pattern? Is it my first trade for the week, and is it a make or break? Maybe I shouldn't take it if it's a make and break. Those sorts of things as well. So it's, once you've learned the systems, you really need to master the systems. And market responsiveness, like we spoke about at the start of the call, that's a fairly significant factor as well, isn't it? So you would have seen over time, whether it's demo or live trading, how much of an impact that can make. I'm sure if you've seen some of the videos that Gabriel has sent out on, like Jamie's trades and things like that, where he has his big weeks, it's when market responsiveness is high and he's really capitalizing on those longer sustained moves where there's lots of momentum, and I think that market responsiveness is influenced by just momentum. You get a sense that momentum is coming into the market, but I also think it's when there's traders from multiple time frames piling into trades. You know what I mean? So I trade the lower time frames, but I certainly notice when, for example, like a daily or a weekly level is broken, you just get those big moves on the low time frames, and it just feels really effortless as well. So that's why it's always important to perform that top-down analysis, which is why it's great that Gabriel's still sending that out. Those videos that he sends out are so helpful.
Yes.
And go back and watch some of the older ones, because you're going to pick things up like all the time. I still do as well, and I'm like, oh, how did you even see that? And then you go back and you're like, okay, all right, I kind of get it now. I couldn't do it right just yet, but I kind of get it, and then over time, it all kind of fall into place as well.
So I was listening into that earlier conversation we had about market responsiveness. I thought about asking a question, but maybe right now is a good time. So in terms of measuring them, do you view them as a sort of with a weekly frequency? In other words, this week was good, last week was not so good, the week before that was a medium. Is the measurement time is typically a weekly, basically a 5-day period, 115 hours?
Yeah, that's a really great question. So I think, my brain immediately went to, that would be an interesting statistical observation to include in my my daily review and report that I write up. So I think that'll be quite a good one. So for me, market responsiveness generally will span multiple days, but it will be kind of like for a week, you know what I mean? So you could almost measure it in a week. What we have to consider is, there's often economic news in the middle of the week that will make the market go quiet or more volatile. So that can kind of throw a spanner in the works. But in general, I have noticed that market responsiveness, the granularity, if you like, is like measured in weeks. Just like the last 2 or 3 weeks or whatever it's been for me, has seemed to be has had a low market responsiveness. Yeah.
Okay, no, that's great. And from your process, the only way to find out is by either having a 1 hour loss, or do you actually let one day go and you decide that, let me test first few hours to gauge the market responsiveness?
Two things for me. So one of them is a bit kind of subjective, where you just get a general feel for market responsiveness. So Todd was talking about surfing earlier, and I'm sure it's when you're surfing and you're out there for a bit, you just kind of get a general sense that, oh, hey, there's a good set coming, or nah, today's going to be a nothing day. You know what I mean? I might as well just pack it up and go home. So I think with experience and that time in front of the charts, I think you develop a bit of a innate knack for identifying market responsiveness. But we can't always be on our A game, and I think it's good to have that lagging indicator where you look at your last, your rolling 20-hour trade rate. You look at your last 3 trades even to see what's been happening as well. And that can tell a story in itself as well, right? To say, oh, hey, hang a minute, I've lost, 2 or 3 trades, the last few days. Maybe market responsiveness is low. So it is low. It can be a good trigger to get you looking at that as well. Yeah. But I'm going to make a note, because I think that it might be worth me noting down market responsiveness in my daily report.
In a daily report, yeah. Speaking of that, Anthony, what are the? It sounds like you are kind of a personality that is very similar to mine. Anything that can be measured or somehow cataloged, you seem to like to catalog that.
Yeah.
What is your inventory of the stuff that you keep track of? Yeah.
So I'll talk about it in a little bit more detail later on in the slides.
Okay, I can wait.
No, it's okay. I wanna. It's entertaining because to hear that other people are wired a similar way that I am as well. My original approach was to just go berserk with metrics and data and things like that, and
right.
It's like drinking from a fire hose. You just get lost, and then you don't know what's significant and what's not significant and all this sort of stuff. So you have to try it for yourself and go through the process and gradually strip away what you find to not add any value. And that's the same for your entire trading process. And that's one of the slides. I'm going to talk through that and in a little bit more detail, actually. Yeah, so good prompt, mate. And make sure I do talk about that in case I forget.
Okay.
Terrible memory. Yeah. And what else did I have here that's worth having a chat about? Master yourself. Okay, so somewhere in between mastering the systems and mastering yourself is about a commitment to continuous improvement and learning, right? So you've learned the systems mechanically. You've gone through, your boot camps and LMP and things like that, and internalized a lot of it. You're starting to get a real sense of what makes a high quality pattern and market responsiveness, like we talked about, and that sort of stuff. But until you start live trading, a lot of it is still not going to be real. And I think most of that is because you're not going to get your buttons pushed. So I don't advocate for people jumping straight into live trading and cutting out demo trading or whatever. You want to demo trade until you're comfortable with the mechanics. And a lot of people get a lot of value out of demo trading in terms of psychology and having their buttons pushed. I wasn't like that. For me, I actually started trading live, I think halfway through boot camp, because I was almost inadvertently and subconsciously kind of like cherry picking things. So in a demo account, I was like, oh, this is great. I'm the greatest trader that ever lived. You know what I mean? It's because I was forgetting about some of those losses and things like that. So doing it in a live account, you get that very real feedback, and you can't lie to yourself or fool yourself or, be ignorant or anything like that, because you have an equity curve, and if it's going down, then you know that something is amiss. Yeah. I'll keep moving. Sorry, guys, I'm probably talking too much, but I'm glad that you're jumping in with questions.
It's really interesting if I can sort of jump in with a related question. My results so far for bootcamp for LMP is demo trading is minus 9R, which is, obviously I prefer it to be profitable. And so I'm going, I wonder if moving into a live money account with just like a $10 risk per trade would actually sharpen my focus a bit. Be interested in your input.
Yeah, look, trading in a live account will 100% sharpen your focus for sure. When there's real money at stake, it doesn't matter what it is, it's going to sharpen your focus for sure. I definitely would be looking at the lessons that you get from every one of those losses, right? Every loss that I look at, particularly in the early days, I used to analyze and probably overanalyze. So have a look to see if there is any lessons and themes in there as well. And just going back to what the guys were saying earlier, have a look at even the times that you're trading at as well. So I ended up reducing the number of trades when I was working from home, reducing the number of trades that I'd take in the Asian session, because a lot of the trades I was taking were almost out of boredom. You know what I mean? It was only when the session was maturing and it was getting closer to the London Open that those trades, there was any kind of consistency in those trades. So there's definitely, power in the data. But like I said, the challenge is working out what data is valuable and what's not. Yeah.
Thank you.
So this was a lesson that I learned, definitely, like be realistic about how much time you have. So when I put this together, was be realistic about how much time you have to kind of learn and participate live bootcamp and LMP sessions and things like that. But it's equally as valid for actually trading the live market. So when you create your trading process and your trading game, make it fit your lifestyle. Don't kind of go in with any preconceived notions that you want to be trading every single day and trade every single session. And, you can stay up, like in my instance, you can stay up to 2 a.m. trading and then, go to bed and still wake up and be fresh and do your day job and things like that. Just be realistic about it and iterate on it. Just as part of this continuous improvement that I talk about, just continue to assess all aspects of your trading, but do that in a structured manner as well. Don't just chop and change for the sake of it. You know what I mean? Like if you have 2 losses in a row, doesn't mean that there's anything wrong with you or anything wrong with your trading. It's just that's kind of the normal distribution of trading. So make sure you do it in a structured way. And, maybe like once a month or once a quarter, have a look at your approach and what's working for you and what's not as well. Watch trade, the live markets. Even if you're trading live, there's so much to be learnt from just an observation, and whether that's doing back testing or simulation or just scanning through the markets and looking for patterns and things like that, or themes. There's so much in that, and just like there's value in watching the live markets. Is value in watching the top-down analysis from Gabriel and then looking at charts from other traders and things like that, and just getting a sense of how they see things as well, because we're all very different and quite often we've got a blind spot for how we see things. You know what I mean? This one fits with my personality type, but not everyone's. Okay, so I talk about a structured approach, and it comes somewhat naturally to me. But in terms of your trading playbook, for example, maybe just get structured about how you set that up and have a section for your S1 and S2 and S3 screenshots. Within that, have some screenshots for high quality setups. Have some screenshots for patterns that didn't pan out for any reason. Maybe in weeks of low market responsiveness, take some screenshots there and see if you can identify any themes. And then beyond your playbook, even just like on your computer, you can just create a nice structure in terms of like having different folders for different things as well that make it easier for you to go back and find information. So I've got just a simple folder structure where I've got, trading as a business with my business plan and my trading playbook. Then I've got another folder for psychology where I've got, beliefs and things like that. I've got, my mistake log whacked in there as well. The Sedona Method, just those things as well. So I find that helped me out. And I don't know how useful it is for other people, to be perfectly honest with you, but I just find that there is a lot of power in having information and having it easily accessible, because in general, you need to make everything as easy as possible for yourself. I find that the minute that something is too hard, it's usually the minute that I stop doing it. You know what I mean? You need to kind of embed some habits, but really make them quite lightweight as well. And that's the mistake that I made early on. I was doing kind of trying to go too far and do too much because of my eagerness to want to trade successfully as well. So just arrive at that happy balance for what works for you. One more point here. I will talk about this a little bit later on, but this consolidated register for all your trades, a lot of value in that, okay? And you don't have to capture absolutely every statistic in there, but there's just a lot of value in having that there. A lot of trading platforms, you can just kind of export it directly from there. And apparently there's some good tools online and things like that. But I just have an Excel spreadsheet that I've added some pretty graphs to and things like that. And I found it very useful for me to create my own, because then it gives me a bit of a more intimate understanding of my actual trades. And you start picking up on themes and things like that. Oh yeah, and then review and iterate. Yeah, so just this continuous improvement. I know I sound like a broken record, but it really is worth stepping back and just taking a look at everything you're doing, and look at your trades and things like that, and like, oh well, what's going on there? Are there some themes? What do I keep losing on a Tuesday? What's wrong with my trades on a Tuesday? Am I better off not trading on a Tuesday at all, or am I just making some kind of fundamental mistake by trading too early in the day, or whatever it might be? So just look for some of those themes. Trading process. So yeah, this is a new slide. So the way that I operate now, this might seem onerous to some of you, but the more that you practice, the faster you get with it all. You know what I mean? And I find that this is the right balance for me right now, in terms of my trading, that allows me to feel adequately prepared for my trading week. And then when I'm actually in the midst of trading, I feel like it slows me down just enough to stop me from doing dumb things, but not being so burdensome that I'm like, I don't want to do that. And, you look for excuses to procrastinate or not do it at all. But on the weekend, so later on today, actually, I'll do my weekly review. And that is looking back at the week so far. So any trades that I've done during the week. And throughout the week, I note down some good examples I think that there might be to simulate. So if I have missed a trade for whatever reason that did fulfill the rules, that's generally like a good candidate for me to note down and be like, well, hang on a minute, why did I miss that? You know what I mean? Was there, did it happen too quickly, or whatever it might be? So I note those down. A weekly review, I think I might have an example of that actually. So maybe I'll run through it in a minute. I do the top-down analysis. So I do my top-down analysis before I watch Gabriel's as well. And then I kind of compare notes, if you like. So I find that quite good in terms of like training me to see things kind of how he would see them as well. And then I have like a number of spreadsheets that I use that just help with my trading. Actually, I'll run through those in a second so you can have a look. And then if it's the end of the quarter, so like, your March, what is it again? September, so on and so forth, December, blah, blah, blah. Then I'll do a bigger review. And that's really looking back at some of the weekly reviews I've done, looking back at the goals that I had set out to achieve and how I've gone in relation to that as well. And then quite often what I'll do is I'll set a few things for me to work on as well. So I'll focus on, only taking high quality trades, or I'll focus on not interfering with trades when I'm in them, whatever it might be, as a way to kind of sharpen my focus and hopefully improve my trading as well. So I used to do a monthly review, but I don't actually do that anymore. I found that in doing my weekly review and quarterly review, that was the right balance. I didn't really need to do a monthly review. Monthly review, I used to do like a monthly review akin to my quarterly review. Was a lot of work. Yeah, it really was a lot of work, and I wasn't getting a whole lot of value out of that. 2 seconds, guys. Sorry. Yeah. Let me see if I've got some material here just to show you. Might do. Yeah. Go. Yeah. Okay. So I'm jumping ahead a little bit here. Let me just get the slide going. Here we go. So I do like a daily review and a weekly review, and the daily review is just stepping through these questions here. Can you see the screen all right, actually? Because it's
I'm just okay. Increase the ratio a bit. So yeah, okay, that's
is it?
Yeah, it's right.
Is that better? Yeah. So you just to confirm, you can see 23rd of 11th, 22 daily review. Okay. Yeah. Thanks.
Plus, very
okay. So I look at mental state, my session preparation, the individual trade analysis, market context, and reading price action, my execution and trade management, and post-trade reviews as well. And then each day I do one of these, not per trade, but for whatever trades I've taken on a particular day, do a bit of a narrative. Just came up with a rudimentary scoring system, which is very subjective, just out of 5. And then I note down any negatives or mistakes, any positives, and the focus for the next trading session as well. And my weekly one it's exactly the same, but it's just basically rolling all of that up. So it looks exactly the same. And I do that once a week. And I found that in doing those 2 reviews, it cut out the need to do a monthly review, because I was looking at kind of generally the same information. Yeah. Any questions around that before I move on? Cool.
So Anthony, when you go to your quarterly review, essentially you have a group of, let's say, I don't know, 30 trades, and each trade along with the typical results, and how much was the momentum and what was the ISL, and some of the standard features. You also have this mental notes related to those trades that you can go by, that most of the time I was a 4 or a better mental state, and the top-down analysis was done. And okay.
Yeah, that's exactly right. Look, then I do this sort of thing. So I'll just take a dump of my results, data, a screenshot, whatever you call it, chuck it in here.
Mm-hmm.
This is the scorecard that I used to use on a monthly basis. And now I just do it at the end of the quarter. It's the same questions. It's the same questions, and I just what I found is, sorry, that that daily and weekly review, that's actually I just put that information in Gabriel's trade log. So I didn't want to chop and change and have 17 different things open. So I just put that information in there, and at the end of the quarter, I just scan through each weekly one, and I just all right, cool. Generally, this is how I feel I performed last quarter. And then I'll do just a summary of my mistakes and learnings, some observations looking back as well, some focuses looking forward. And in there, then as part of that, then I do a big picture review. So just a giant top-down analysis. So I zoom right out to monthly and weekly and just look for any kind of general themes in there. Then just some specific goal setting as well. Yeah. Don't get too hung up on that. It's really about the process, and you've got to do what's right for you. Because I remember I was doing this in September, My wife came in and she goes, what are you doing? Why do you spend so much time doing this stuff? And I'm like, well, I actually really enjoy it, but I get a lot out of it. It's not about how it looks. It's about kind of the questions that you ask yourself, you know, and about having that operating discipline to do it, to look back, assess how you're going, and set some goals looking forward as well. So that's the real value in it, not in having pretty pictures and graphs and things like that. Yeah.
How long, Anthony, how long did it take you from essentially having an idea to have a process like this? And I know everything is a continuous improvement, so I'm sure you have added things over time, but to be in its current form, is it a several months worth of effort, or how do you describe it?
I couldn't even tell you, mate, in terms of like duration that I actually, like in terms of direct effort to actually do it. But I've been refining the process definitely over the last 6 months. So when I returned to work and I had less time on my hands, I mean, that really forced me to refine the process and say, well, hang on, I don't have time to do all of this and trade and work full time and spend time with the family and everything. So over that time, I just kind of culled it. But I really started thinking about the trading process right from boot camp and started kind of, you know, playing it out and looking at how I'd apply it. And from then I've tweaked it. And what I've arrived at now is lightweight enough to make it easy and still kind of slows me down enough so that I'm asking the right questions and things like that. I don't know if that's answering your question really, mate, is it?
So 6 months, it sounds like that's a number that because I mean, trust me, I'm getting a lot out of it, because for me, what you are doing is the biggest weakness that I have. This is like really high octane process that you have not only implemented but also documented, right? I'm like not even anywhere close to implementing anything, and it's partly because it's a circular problem, right? There is a lack of clarity in the thinking. That thinking prevents me from implementation. And because I don't have implementation, documentation is out of question.
Yeah. So my guidance here would be pick one thing and start with it. And for me, that one thing would be something like a daily and weekly review, just to keep it really simple and just make sure that you're going through, like at the end of your trading day, you're having a look at the trades you took. You're seeing if you did anything silly, so you have an opportunity to correct it for the next day. And at the end of the week, have a look and just zoom out a little bit, you know, and take a look from a kind of higher perspective or whatever the right saying might be. And again, see if there's any themes or anything like that. Just doing that alone is you're going to be ahead of like 80% of traders, I think. I don't think that people really take the time to actually look at what they've done and see if there's anything they can do better from that.
In terms of keeping a trade logs, do you have a same structure what we used to send it to Gabriel, like a top-down thing that just goes?
Yeah. So if you have a look here, see, trade log, Gabriel analysis, screenshots, and then quite often I'll do a follow-up screenshot, and then daily, weekly review. Here's one other thing that I do. I do this there as well. So you can see November, not a great month for me. I was feeling sick, busy at work, all that sort of stuff. But there's my trading for November and all of its lack of glory. Nothing spectacular there for November because of the low market responsiveness. Yeah, unusually low MR. And a lot of no trades as well. Just, work, not feeling well, whatever it is. And I used to beat myself up about that. If I couldn't trade, they used to make me used to get me so worked up and frustrated. And now I'm like, I'll just go with the flow. Because I know that if I force a trading session, I'm highly likely to do something stupid and risk too much or just take a low quality trade or whatever. So I'd rather just sit on my hands and not doing anything than try to force it. It's hard for me. I still do find that hard, to be perfectly honest with you. Like, this is my personality type. I just kind of like action and things like that. And when I feel that way, I'll do something trading related that's not trading. So I might watch something on YouTube that's trading related. I might go through my trading playbook and, restructure it a little bit or whatever it is. And then I feel like I'm doing something that's getting me towards my goal without actually having to be in the market as well. Yeah. And my trading game is similar to what Pete was talking about. So I trade Tuesday, Wednesday, Thursday. Monday is like an opportunistic trading day. Sometimes, say that I happen to be working from home and I see the themes emerging and the trends emerging early, then possibly I will trade. But it's probably like 20% of the time that I would actually do that. It's quite rare. Also because I like having Monday and Fridays off, to be honest with you. I was getting too burnt out, really, working full time and you know, treating trading so professionally as well. It's quite taxing, right? So I have Fridays off all the time now. And then Tuesday to Thursday after work is my trading days. Oh yeah, cool. Yeah, trading process. So what I do is when I get home from work, I like to have almost like a little ritual, if you like, before I trade. So quite often I'll actually, you know, once I've seen the family and all that sort of stuff, I'll jump in the shower and have a quick shower, get changed out of my work clothes and into more comfortable clothes. And then it says here, I either do a meditation or 20 push-ups, depending on what I feel. I do meditation like 90% of the time, and that's just like a quick 5-minute, close your eyes, do some breathing. And I just put on this, it's that hemisync music, I think it is. I can't remember what it is, but it's the binaural beats or whatever it is. It's just, for whatever reason, I find that quite relaxing, so I chuck that in there. But some days I come home from work and I'm really like completely buggered. I'm really tired. So I'll smash out 20 push-ups to try to like wake me up a little bit. So sometimes I need that. And then sometimes I just need to chill out. I feel too wired from work and I need just to chill out and relax a little bit. So I might do a slightly longer meditation there as well. And then I'll complete my pre-trade checklist in Excel before I start trading, which I think I did open up here. Yeah, I think this is it. Yeah. So I'm looking at my other screen here. So this used to have like 20 questions in it, and I culled it right back. And I call these like leading personal indicators. So before I start trading at any day or trading session, I run through this list here, and that is to give me insight into my mental state, really, because I found that there's a high correlation between my mental state and my positive trading days. So if I haven't slept well, if I've skipped the gym for a number of days, if work is annoying me, if something big has happened in my life, then I'll, I find that it impacts me. So I'll answer the question here. So if I were to say yes here, for example, then it says, hey, you don't have a green light to trade. So I put in that little formatting there as a way to force me to actually go through this process, because like I said earlier, I was very prone to skipping this sort of thing and just diving straight into trading. I'll zoom in a little bit here. Yeah. Can you see that better, guys?
Yep. Thank you.
Yeah. Thank you.
Am I skipping my pre-trading process? Am I skipping my documented trade analysis? Am I not entering trades in my trade register? Some of these are, if I'm skipping those things, that's a sign as well that, hey, I'm getting lazy with my discipline, which means I'm going to get lazy with my trading as well. Am I spending time in front of the screen just for the sake of it? You know what I mean? And then there's some lagging indicators, which are largely the first two are born from data. So have I experienced a streak of suboptimal mental state? So I'll go back to that trade log that you saw before in my daily and weekly report card. Have a look at that. And then in terms of the actual data, like looking at my rolling 20 trade win rate, looking at the equity curve and whether I had 3 consecutive losses as well. And the other one I put in here is, are people commenting that I look tired? Because that was happening for a little while there when I was trying to do everything. So I've got that there. Anyway, so that's what I do before I start the actual trading session. So I get this, it stops me from diving straight in, and really is just designed to slow me down. And then I'm going to go through this a little bit quicker. Sorry, guys. I'm mindful I'm probably waffling on here. And then I just got a trading session prep as well. So once I'm okay to actually dive into the trading session, then I've just got a bunch of things that I run through here, including something that my wife bought me, just this little nice smelling spray. So I spray that, and it's like, I use it as like a bit of a trigger to get me to relax as well. Or maybe my wife's telling me that I'm smelly and my study's smelly. It's probably more likely. Anyway, I'm using it. She bought it for me, so I use it. So I run through a series of questions. This one here, I actually really like. So I got this from someone called Lisa Major. So she's in the Super Trader program, and she jumped into LMP that I was part of as well the first time around. And she talked about having a specific intention for each trading session. And I like that because it just kind of brings your consciousness to something, right? So it's just like a mini goal. So I really like that. And then I've just got some basic trading mechanics questions that I run through. And this here is born from mistakes that I've made over time. So I think somewhere along the line, I said that you need to design a trading process to protect you from you. And I think it's really important because we're all different. We've all got our strengths and weaknesses and things like that. And you really need to look at your weaknesses and say, all right, what can I do just to kind of slow myself down and stop myself making the same mistake? So I've got a few explicit questions in here that I run through. And I've got the link to the Baby Pips position sizing calculator as well in there. Because as you scale up your trading account, you want to let compounding work for you naturally. So to do that, you want to appropriately position size as well. And sometimes I was actually undersized, and then sometimes I was oversized because I was too lazy to do the specific calculation. So just by having the link there, like I click on it once and then it's open, and then I just punch in the data, and that tells me what position sizing I need to run. So that's the Baby Pips one. There's a heap of them around anyway, but that's the one that I use. And then I use this spreadsheet I got from Gabriel. I think I might have tweaked it a little bit, but it's got the time frames across the top. It's got the patterns, the setup, the systems, sorry, beneath it there. And then it's got the currencies down here. And when I'm doing a scan of the market, if I see anything developing as a setup, I'll put an X in here. I'll have a bias here, whether it's up or down for the day, and then I just highlight stuff. So yellow is maybe just draw my attention to it. Gray is that's looking like it may actually surprise, so maybe it's an overall sideways, but it might kind of spring to action. Orange is the short list, and then purple is actually a setup that's in play at the moment or in progress as well, and looking like it might trigger. And then I'll put themes. Just whatever themes I see on the day. I did put at the top here. So I do this every day. It really doesn't take long. It's just part of your daily scan. You do it, plug it in here, and then basically anything that is orange or purple, I have a profile in MetaTrader 4 called Shortlist, and I just put all those charts in there, all those pairs in there, and then that makes it easy because then generally I'll just have that screen there, and I'll just have some, I have the flat line, and I set Audible Alerts, and when one of those trigger, that's my call to action. So that way I'm not like glued to the charts, looking and continually scrolling through and scanning and scanning and scanning and scanning, which is extremely taxing and also distracting because then you might actually miss something where there's momentum behind it. You might actually miss a valid setup as well.
Just while you're on that, Anthony, what kind of Audible alerts do you have?
I actually posted the Audible alerts to that. I use them in MetaTrader. Excuse me. So I use MetaTrader 4.
Yeah.
I created my own custom ones in there, and I posted on the Slack blog somewhere along the line as well. So the ones I created are with the bell sound that MetaTrader 4 has, but then I appended to that S1 long, S1 short, for all of the setups as well. And then I also added another one for level up, level down,
Right.
and long-term break.
So it's quite easy to do that, and I'm just not very IT oriented. That's my issue. Yeah, rather.
They're on Slack somewhere. I wonder how you would find them, but you should be able to just find them on there and download them. Yeah.
Okay, I'll have a look for them.
How we're going for time? Sorry, I think I don't know how long we're meant to go for, but I think I'm going over time here. Sorry, guys.
Oh, mate, it's fascinating stuff. Yeah, it's great to see. Thank you. It's a phenomenal level of diligence, I would say.
Insight.
Yeah. And not for everyone. Okay, so this is me. I like data. I've got an IT background, but you don't need to make it this heavy or anything like that. Just do whatever works for you. Good. I've been talking all week as well. I run a lot of workshops for my day job, so my voice has been cutting out all week. All right. What have we got here? Simulation. I still do a lot of simulation,
Okay.
particularly of S3. Full disclosure, I suck at S3. I'm terrible. Still, I don't know what it is, but I have so much trouble with it. And it's really around quality, like finding high quality S3 trades, because some of the S3, a lot of the S3 trades that I take just don't go anywhere. They're quick stop outs. And look, that is kind of consistent with the win rate for the systems anyway. It's a lower win rate than S1 and S2. So maybe I shouldn't beat myself up so much, but I still think that I suck at it. So more practice required there.
Yeah, fine. I don't think I've taken any live S3s. So when you do simulation, are you simulating live market data from the last week, or are you using projects that Gabrielle gave you from FX?
I'll create my own from last week. Yeah.
Great, thank you.
Yeah. And remember what I said. So each day, if I see an opportunity that I've missed, or I see even an interesting idea, I'll note that down, and then I'll use Forex Tester.
Sure.
Oh, good. Struggling.
You talking about giving workshops. Now I understand why your presentation's so immaculate.
Thanks, That's I stole my my day job.
We're going to measure up to this.
You'll be back again, Anthony.
You guys can have this prezzo. Anything that you want that'll go, just let me know and I'll send it your way. I'm happy to share it.
That would be awesome, Anthony. Yeah, we really appreciate that.
Yeah, just message me, just whatever you want that you've seen. All good.
What's your email? If you can type it in the chat.
I'll just do it on Slack and then I'll email.
Oh, okay. Perfect.
All right. Any questions on this stuff here? Because I'm losing my voice.
Yes, I understand. And also want to respect that you've been a bit sick, so I don't want to overtax you when you've been so generous with your time and energy.
All good. It's all good. There's definitely a few more slides that I want to talk to.
Okay.
But on this one, maybe what I'll call out is this here. So cover off your trading process, your trading game, in a trading plan. So start writing a trading plan if you don't have one already, and start small. Don't bite off more than you can chew and see it as this, behemoth of a thing. Just do a table of contents to start with, and then fill out one or two sections just to start. And then when you do that, make sure you use it and reference it. Don't just write these things for the sake of it. Make sure that you're embedding it in your behavior as well, because that's where the value is, right? It's not in writing a trading plan once and then like, oh, okay, I've done my homework, I can move on. You want to bake it into your routine.
Right. Anthony, are you using the same trading plan template that some of the super traders are using, or what template did you refer to?
I just came up with my own one. Yeah, because at work I'm always writing documents. I just came up with my own one. Yeah.
Okay.
Yeah. I think if you guys do masters, Gabriel will send you some stuff to help. I don't know, like you don't cover much on trading plans, do you, in LMP? Yeah. Sometimes I'm mindful. I don't want to be disrespectful to Gabriel and give too much away, if that makes sense. Like I think I strike a good balance between being open and honest here, and then not giving you like all the masters information and stuff like that. So I hope it comes across all right.
That's fine. I can stop the recording if you want me to.
No, you're all good. You're all good. This is exactly the same as the last time around. I still find this funny. Every time I see it, I'm like, it doesn't matter where you are in your trading maturity. I think it's always relevant. You know what I mean? Because I think as humans, we're beautifully imperfect and we always do dumb stuff. And I definitely excel at that and do lots of dumb stuff. Okay, so let me just put this up. So this experience was based on the bootcamp and LMP, but again, I think it's definitely still relevant. So interestingly to me as well, when I had a look at this, these kind of themes I've carried on to my live trading as well. So I found it easy to understand the systems and easy to understand the exit algorithm. But I found it harder to identify high quality setups and only act on those versus every setup that I saw. And also, even though I understood the exit algorithm, at times I found it tricky to adhere to it because I have a tendency to interfere in trades. I'm much better at it. And I've got an example on limiting beliefs that we're going to run through, and it's on that specific thing as well in a minute. So we'll see that. What I found challenging was the scanning process during bootcamp and LMP, and then that translated to live trading for me because I found it tricky to be self-sufficient, if you like. So I still felt kind of a bit of dependency on Gabriel's analysis and top-down analysis and things like that. Probably only the last like 3 or 4 months where I feel like I can just do my own top-down analysis and see that some of those themes are actually, playing out in that trading week as well, which is good, or even over the time frame. So that's been really encouraging, but it takes time and practice. So you really got to have a go yourself, and I'd advocate do your own top-down analysis and then look at Gabriel's and then compare notes. Yeah.
And Anthony, I remember from the workshop, Gabrielle talked about the TEBSA acronym, so the trend, the EMAs, the B, the big numbers, the support, the resistance. Is that still the framework that you're using?
Yeah, it is for me. The other thing that I also throw in there are the pivot points.
Okay.
Actually, you know what? That's not necessarily true. So that's not for top-down analysis. That's more for my trading on the day. So if I'm actually looking at setups and things like that, I'll actually overlay the pivot points. So yeah, that doesn't apply to my top-down analysis. So my top-down analysis is still as it was back then, and yeah, leverages those items. Yeah.
Right. Thank you.
So this one here, transitioning from simulation to live markets, that was tricky, just like it was tricky to transition from like a small account to a bigger account and increasing position sizing as well. That's tricky. And it's only recently that I've gone to my full position sizing, to be honest with you. And then I'll reduce as well. If I aren't feeling well, like now, I reduce my position sizing. And I honestly don't know if that's the right approach. You know what I mean? But I just find that because if I'm not there 100% mentally, I'm still prone to making some mistakes, so I'd rather reduce it. They're on the side of caution, than not as well.
Yeah.
And then, where is it? I thought I had something. Oh yeah, the group learning environment. You want to keep that up. So when you're trading live, you want something similar. So start up, like whether you call it an accountability group or networking or whatever it is. There's a lot of value in that, again, for that diversity of perspective, but also, to keep each other honest and things like that as well. So I'm a big fan of that, and I kept that up after LMP and throughout masters as well with a few of my mates from the course, and that works really well. Okay, and this one, reviewing your past trades, daily reviews, weekly reviews, quarterly, all that sort of thing. A lot of value in doing that as well. Also, excuse me. Also, your adherence to process. Start paying attention to, are you sticking to your trading process? Are you sticking to your trading game as well? Because quite often you'll start drifting slowly, and before you know it, you would have completely diverged from what you actually said, which is why I try to reinforce that when you write your trading plan with all that sort of stuff in there, like have it open every trading session, you know what I mean? Review it on a weekly basis, whatever it is, but make it part of your process as well. And then in terms of tools, we covered a lot of this already. So I've kept GG's template and just added my daily and weekly review to that. I kept my trade register and dashboard, this thingo from Gabriel as well. Slack, I'm still using. The mistake log, I'm still using. Streamlined my checklist, and then I streamlined my review process as well to daily and weekly as well. Okay. All right, just give me 1 second, guys, to clear my throat, because I want to talk through this one here.
Yeah, take your time, man.
All right, so this relates to both Sedona Method and also some stuff that I do at work as well. So it's called the 5 Whys, and it's just an iterative process that can help you to get to the root cause of a problem, or the way that I've applied it, the root cause of a belief, or even like a root or underlying belief, particularly a limiting one. So in the business world, it's used for this. It's used to ask a series of questions to find the actual cause of a problem. And I don't think that it's designed for the way that I've used it, but I found it really useful. And I'm going to run through an example of it. And like I said, I'll share this so you can have a go yourself as well. It's super simple. You can just kind of Google the process as well, like I've said here. But I treat it as an internal dialogue with myself. And interestingly, like we were talking about before, like being a logical person, I was like, I don't really believe in that sort of stuff. But it's only since I started doing the Sedona Method that I've been more open to this kind of internal dialogue as well. So I found the process really interesting, really, really interesting. And for those of you that are going to go forward with masters, you spend a lot of time on this side of things as well. So this is one of my most common, or was one of my most common recurring mistakes as well, was interfering in a trade, in an open trade as well. So following the 5 Whys process, you ask, so yeah, why do you feel the need to interfere when you're in a trade? And actually notice here, so the use of the word you as well. Like, it's funny when the questions are being asked, I feel like it's coming from somewhere else now, which is quite interesting. And then you'll see that the responses are all from me, like, I feel, yeah. So I started, why do you feel the need to interfere when you're in a trade? Because I'm scared of losing. Why are you scared of losing? Because part of me still thinks that losing means I was wrong and that being wrong is bad. Why do you feel that being wrong is bad? Because I identify with the outcome of my trade, and a losing trade makes me feel like a loser. Why do you care if you feel like a loser? Because I believe successful people don't lose, and I want to be successful. Everyone loses at some point, but why do you care about being successful or feeling like a loser? Because my ego wants others to see me as a success. And then separate to the 5 whys, this is the thought that came up. So basically, so you are trading for other people. That's interesting. Why don't you just trade for you, or just not even just trade? When your ego pops up, and it will, then acknowledge it and negotiate to suspend it. Do this ahead of every trading session, and maybe you can just do it at the start of the week, or simply just release these beliefs. You know how, and that's a reference to the Sedona Method. You are not your trading. You are not a loser, just like you are not a winner. You are you until you're not, which I don't even know what that means, really. Follow your process and just be.
Beautiful.
Yeah, like I said earlier on the chat, it's from the Sedona Method and the other psychological work and looking at your beliefs. Like, I got an engineering background, I'm logical, and then this sort of stuff comes up, and where I don't even understand some of it. It's like, you are you until you're not. I'm like, well, what does that really mean? I don't know, but there's something in there for me to explore for sure. And then it was funny. So this isn't something I've just done. I did it like a while ago. Perhaps most interestingly, I had done this process early in Masters, and then posted something about me interfering with trades. And Jamie responded straight away. And he was like, all right, so, you feel the need to interfere when you're in a trade and you're scared about losing. He's like, well, that's an easy fix. As soon as you enter a trade, put it in your register as a one-eye loss straight away. So you have to deal with it right at that point and write it off. It's a one-eye loss. So, like, outside of all the psychological side, there was a very simple mechanical fix that will help me to deal with this as well. So I call those sort of things kind of mechanical fixes. I don't know why. Just because it's something, a tangible action you can implement straight away. So I thought that was great, you know what I mean? And I implemented that and haven't looked back since. And I'm not saying I don't make this mistake, because I do. And in fact, I'm pretty sure it was like either this week or last week, I interfered with the trade. A little bit different this time. There was a bit more context around it and a bit of intuition and things like that there. But I still am prone to it. But it's just a really interesting process to uncover, some limiting beliefs and get some insight into what's going on in your head that you might not be aware of otherwise as well.
It's really cool.
And don't feel like you need to do this all the time for everything, right? So again, it's like sometimes you'll make a recurring mistake and you're like, okay, cool. It's just a mechanical fix. I should be using stop entry orders or whatever it might be. But for some recurring mistakes or some limiting beliefs, I find that this sort of process is really valuable. That's pretty much all I had.
Thank you so much. I have that I'm a loser or I'm afraid of appearing like a loser belief too. So that was extremely helpful for me. So thank you.
Brilliantly done, Anthony. Brilliantly done, mate.
Oh, thanks. Yeah, thank you, guys. I always try to be open and honest about my journey so far and where my head's at, in the hope that it'll, trigger some thinking in people, or people can relate as well. Yeah.
No, this is amazing, Anthony. Thank you for sharing.
No problem. I really enjoyed it, and I apologise that my my voice gave in before I did there at the end. And I mean, anything that you've seen that you want to have a look at, just message me on Slack, and I'm happy to share.
Wicked.
Thank you.
Thank you very much, Anthony. Really appreciate it.
Thanks, everyone.
Thank you.
Best wishes for getting well soon.
Thanks, mate. All good. I gotta toughen up. All good.
Thank you. Thank you.